Hello, my name is Ranil, and for today's oral assignment, my topic is a very popular one, which is why is crypto so popular among the millennials? Okay, so what is crypto so popular among the millennials? As the chart below depicts, the age group between 25 to 34, known as the millennials, have the highest adoption of Bitcoin than any other age by far combined. As at the chart shown below, the the millennials is the poorest generation, whereas Gen X, followed by Gen Z, enjoy a much higher share in wealth. But why is that? According to wealth managers and widely accepted benchmark, you need a minimum of 8 to 9% of returns annually to retire for living the same lifestyle as before. Now look at the chart. It shows the annual yield rates of 10-year US Treasury bonds. US Treasury bonds is considered to be one of the most secure assets one can invest in. And we can see that in 1980s, the yield on these bonds was well above this range, up to 15%. But currently, the bond has a yield of just 1.9% annually, which does not even beat inflation successfully. This does not, it's not feasible for millennials to invest in. So now what? Okay, so as a rule of thumb in finance, for gaining more returns, you can invest in riskier assets. The chart below shows how alternative investments have increased in the pie of public pension funds. Alternative investments include riskier assets like hedge funds and private equity. Private equity basically means a lot of people combining their wealth to invest in startups and risky businesses. Uh, in this chart, we can see a dramatic increase in the allocation of private equity from $1 trillion only in 2004 to $7 trillion in 2020. Such a huge increase in private equity in just 15 years have resulted in any substandard XYZ startup getting funded, which is very risky to do so. In this chart, this shows the average value of Series A deal by year on year, where in 2012, the average deal size for Series A funding was only $500,000. It is well beyond $1 million currently in 2022. Not to mention the number of Series A deals have also increased dramatically. This leads to overvaluation of companies. And in a very simple example, I'll explain it to you where if I buy a packet of chips for just $1 and sell it to person A for $10, person A sells it to person B for $100 and so on and so forth. Somewhere down the line, someone will stop this and ask, wait a minute, why should I pay billions of dollars for something which is only worth $1? And thus, the last investor invested in this will be in a huge loss and the whole system will crumble down. In practical terms, this happens when a company, a startup, goes public through an IPO or an initial public offering. And this chart on the right side shows exactly that. This table shows the current prices of stocks versus when they went public. Okay, and we can see a lot of them, almost all of them are in red, and they are from 37% minus to 85% minus. Now the question is, what should the millennials do? Uh, Investing in bonds give only 1.9%, as we saw. Investing in fixed deposits is also not rewarding anymore, according to the chart on the left. And that too, your profit after paying taxes will effectively be at around 4% only when investing in fixed deposits. Investing in stocks is also getting costly. The chart on the left shows the number of hours one must work for purchasing one unit of S&P 500. Where you only needed to work for 40 hours in 2009, you have to work three times more for purchasing the same amount of S&P 500. Finally, coming to the uh, answer this question of ours, millennials have always observed absurd levels of returns coming from cryptocurrencies versus any other asset classes. According to this chart, it practically tripled the investor money each year for the last 10 years or so. And that, my friend, is the reason crypto is so popular among the millennials. Thank you so much.